This is my conservative growth performance record, and I wanted to show you this to just sort of bring out some of the numbers and why it works so well. So this is the years that I've kept track. This 14 years so far. 2012 isn't concluded yet as I'm doing this video, so I don't have that. But CG stands for conservative growth here, and this is the percentage gain or loss. This is the Vanguard Index 500 fund, or the S&P 500 fund, index fund. This is the Vanguard Total Bond Market Fund. And this is a 65-35 blend, which is pretty typical. Financial advisors will tell people to put 65% in equities and 35% in bonds. So that's what I did, 65% this Vanguard Index 500 and 35% the bond fund. And this is the money that it grew for $10,000 would have grown to. And as you can see with my plan, my strategy, over 32,000. And the nearest portfolio here, the nearest one to me is 22,700. I did 32,700, so I'm 10,000 ahead, or 10,000 is almost, it's like actually I think it's 44% more than this amount. So I did quite a bit better than the best portfolio mix. But here I just wanted to show you why it works so well. Going with the bull market, but then trying to get out and avoid bear markets. Now, here's the Vanguard Total Bond Market Fund. Made 8.6% this year, which is quite good for that fund, but I made 17%. So I made quite a bit more. This year was the only year that the bond fund lost. It lost a fraction, which is not bad, but that year I made 23%. So again, I really blew it away. And this year the bond fund made 11%, which is nice. I made 12%. But if you look at the S&P 500, it lost 9% this year. It lost 12% the next year. Lost 22% the next year. Whereas I gained 12%, gained 5%, and lost less than 1% in 2002. So I gained again on that portfolio. This one, the S&P 500 did well, up 28%, but the bond fund only did 4%, and I did up 19%. So again, you can see the difference here. It's a 2.4% for the bond fund, and I made over 8%. And this one, 2008, the S&P 500 lost 37%. And I lost that year. I lost 14%, but it's a lot less than 37%. And in this year, 2010, the bond fund made 6%, pretty good year for that, but I made almost 23%. So I think that brings out why it's been so advantageous to use my strategy to go with the bull market and try to avoid the bear markets. And also, I like to point out to people that you could do better than me, because sometimes I'm too conservative. Because I'm doing this, I'm showing it to the public. I want to make sure that I'm not losing money. For example, in 2009, the index, the Vanguard Index 500 fund gained 26%, but I only gained 9% because I was conservative coming out of that bear market. I didn't want to go with it. However, you at home, you're doing this with your own money, you might decide to have gone with it, and you might make more money than me. So this has been a conservative way, and as you can see, I've done quite a bit better than the market. And that's it. So if you have any questions, please email me at jim@jimdelvecchio.com, and good luck with your trading.